All right, beautiful. So, how you been anyway, Eric?
Yes, been good. I think the market has changed a lot of things of late, and Easter and kids and juggling everything, and yeah, it's been fun.
Beautiful, beautiful. All right. Okay, let's get into it. I will start with the official introduction. Okay. 3, 2, 1. Hello, everyone, and welcome again to another special edition of a Radio Chat. Today, we have a very special guest joining us in the field of commercial development finance. Our special guest is Eric Trieu, who has over 20 years experience in project marketing. He was CEO of 2 international marketing firms, the Aldi Group and Empire Property Investors. Eric joined the Holland Capital team in 2015. Eric is a seasoned commercial development finance broker and has helped numerous developers source financing for various projects, ranging from small-scale developments to multi-million-dollar commercial projects. Eric, thank you for joining me today on the Radio Chat. And if we could start with a bit of your story and how did you both get started in the development finance industry?
Thanks, Al. Thanks for inviting me. Basically, I've always been in property. I started, as most people would, probably in real estate, and eventually over the years progressed through owning my own, real estate franchise, and then got into project marketing as the market evolved. So with the connection with the property developers, just kind of sales, marketing, it made sense to evolve with the funding requirement where developers required significant, solutions. So yeah, it became a natural, progression from sales and marketing, property into property development funding.
Okay, it's interesting. Yeah. As you know, the theme of this podcast is about the radio board game. If you were to explain to a 12-year-old kid, what do you do in very simple terms? What would it be?
Good question. Pretty simply, we arrange the money for the developers to build projects. I would probably say that's probably a lot simpler to explain.
Yeah, a lot simpler for a 12-year-old kid. That sort of makes sense, doesn't it? Yeah. So what got you started in your business and how are you helping your ideal clients?
I think understanding their needs. I guess the key was always trying to find the right funding solution. I think is where a lot of our developers are looking for answers, alternative options. Of course, everyone knows about major banks, but also there's other options out there as well that maybe most people may not know. But definitely trying to find solutions as markets evolve. That's really what I find quite exciting to work with. And yeah, trying to find that funding solution, either through structuring the deal, senior debt, junior debt, could be mezz, could be equity, could be other solutions out there. So that's pretty much what we specialize with. Yeah.
Right, especially in this day and age now, it's getting even tighter with lending, right? It's harder to get money for development projects, yeah?
Yeah, I mean, back in the old days, it was quite simple for a developer. If you had experience, you had the right builder, you got pre-sales, you can pretty much talk to most banks and then off you go. Nowadays, that's not quite the case. Even with pre-sales, we're hearing stories where people are choosing to either cancel or rescind all contracts, resetting, or just holding on and redeciding what they're going to do later. Just the way that the constraints market is evolving at the moment.
Is it because those developers can't seek the finance they require, or is it because the cost of finance is just too high to make the project viable?
Good question. I think the market's evolved a lot. Obviously, with pre-COVID and post-COVID conditions, construction costs escalated. That's what is definitely putting a hindrance on most developers at the moment. GRs are slightly softening a bit, but not to crazy numbers. It's actually okay at the moment. But yeah, the build cost escalations has really drawn out the project profit margins, delaying projects, making some significant impacts to the developers at the moment. Absolutely.
And I guess before COVID, there will be a lot of funders who were keen to lend on a lot of development projects, whereas now they're sort of really being picky, to lend their money. Is that the case you see on your side?
Yeah, they're definitely a lot more cautious. They're looking more thoroughly into every single project. They're looking in more details of each application, a lot more scrutiny. look at financials of the builders, very, very importantly these days.
Yeah.
So the builder might have a strong reputation, might be doing a lot of product in the past, but right now, how many projects are they doing? How's their financial, and how much cash flow have they got? So that's crucial at the moment.
Okay, very, very interesting. Yeah. So what criteria do lenders typically consider when evaluating commercial development loan applications? And how can developers best position themselves to secure that funding?
Good question. I mean, as a lender, they always look at worst case scenario. So as a project or property developer, most people get positive, best case scenario. But the lenders look at worst case scenarios. So you can look at C risks. Most banks or lenders will look at, say, how strong is the developer financially. So look at your balance sheet. It's what we call A&L, the assets and liability statement. Certain clients have bought properties and built their portfolio. So once they look at developing, they could use that to show how strong they are financially. So that will help. Income will help. Certain banks want to see serviceability. The non-bank sector probably won't look at that too heavily, but look at how strong equity I've got so behind them again. Other things that the lenders will look at, I guess, de-risks could be pre-sales. So if you've got a project of 10 odd apartments, if you got 10 of them sold, that's great. So it helps the lender come on board and look at de-risks, so that option is ticked. Other ways could be de-risking a project could be through cash. So again, if you've got some significant savings or from past projects, you can put the cash in, borrow less. Say, for example, you're borrowing a 50% LVR versus 80% LVR. That completely changes the dynamics from a lender's point of view of risk. There's some quick things there that lenders look at. The builders, as we mentioned before, right now is crucial. They do scrutinize which builder you're using. Most clients shop around, try to find the cheapest cost to build. That may not necessarily be the best option. You might want to look now how strong financially are, what's their reputation, what have they built recently, have they been on time, can you look at the product, can you ask to speak to previous clients, and get into the details of the nuts and bolts of that. So that's probably what we would suggest and recommend.
So do you find the pool of funders before COVID has been sort of reduced now compared to what it was before COVID?
It was interesting. Good question again. Pre-COVID was a different market altogether. Of course, the banks was very, very strong at that time and very strong appetite. Since COVID occurred, there was a lot of money shifting through financial sector, property sector. And interesting enough, what we saw was our property market boomed. A lot of the property prices escalated, which is great for the developer at the time. At that time, also a lot of the funds, they were getting a lot more money because they're taking money away from the financial sector and throwing into the property, which they found very, confident, a lot of confidence in the property market at the time. So we had a lot of funds with lots of money looking to house them. So they were quite keen to fund projects. So that was the COVID era. Post-COVID era, right now, with the way that the sector's gone, interest rates, the RBA, and the way things are happening, cost construction, so forth, they're a lot more stringent, a lot more cautious, a lot more detailed. So before they might look at 10 projects and fund 2, now they look at 10 projects, might fund 1. If that. So they're a lot more cautious. So they're still keen. Money's still plenty out there, but they're a lot more cautious.
So I guess it would be a real challenge, even though reputable developers wants to secure that finance, is trying to compete for that source of funding. Yeah,
definitely. A lot more, tougher conditions. They've been met with high cost to build, high cost to purchase lands, GRs are softening. So it's not the easiest time for developers to make money, but there's always solutions, still options out there, obviously.
Okay, beautiful. Yeah. So what do you find most rewarding about your profession?
The best, obviously, is the solution. To find, a challenging case come to our desk from day one and find a solution either through a capital stack or a solution through arrangements or structure, or just could be different dynamics of product or different advice. We could guide them along the way, and seeing the end product. That's the best thing. Once we can walk through, maybe 12 months later, see what we talked about a year ago, and now we can actually walk through the architectural design home, or it could be apartment building or shopping centre. That's very satisfying to see the end product. It's one thing to think about a project, plan a project, see the end product is definitely
especially in property development, things takes time. It's not just a matter of weeks or months. It could take years to see the concrete, physical building compared to when it was first put on paper, essentially, right?
Absolutely. I mean, a lot of the times clients may have been thinking about a site and shopping around looking for a site that could take 6 months, 12 months, sometimes longer to find a perfect ideal site. And then once they found a site, do some plans and visos and work out the numbers and seeing if that site's suitable for what they're planning. In that time, the market might shift or evolve, and they might need to rejig those numbers again. And then beyond, to actually find construction solution, construction funding, building it, and obviously end realization. It could take a number of years. And even that, sometimes you got to buffer more time. So it's definitely delayed.
Very, very challenging times ahead, hasn't it? So what would you consider to be the biggest challenges facing developers today, and how do you address them in your work?
Very clearly, as mentioned, it is cost construction. That's probably one of the most, challenging risks right now for any property developer in any sector. But as mentioned, there's buildings coming up all the time. There's supply and there's demand. If you understand the rental vacancy throughout Australia right now is super tight. So there is not enough property for people to rent. So if you just go to any inspection for rentals on a weekend, you probably see anywhere from 10 to 20 couples lining up for the same property. That's telling you how the demand is at the moment. So that's a good problem for a developer. There's strong demand. So that's a good foundation for a developer to give them confidence to build. So the next, obviously, is trying to find the right product, the right locations. That's the key for the right developer to solve. I think de-risking construction costs, ways that we've been doing it these days are one, factoring in, more a contingency. So most standard developers or lenders, they'll look at 5% as a project contingency as a buffer. Nowadays, we've been shifting that to maybe some cases 7.5%, sometimes even up to 10% as a standard requirement in the funding table. So we've increased the contingency. So we've seen that's required a lot more, obviously. So the second thing we've been able to do is actually plan a longer term. So ideally, most people might have a 12-month build plan. Maybe now it's a 15-month build plan. So very rare have we seen the last year or two projects build under time. Most cases we've seen is delays. I haven't seen many build right on time what was planned. Most are being delayed. We're continuously finding ways to solve the solution at the end of the product. It's running out of time, needs more term. So factoring a longer build time is advised. And lastly, probably find a buffer. So most developers may not have a project buffer. So if you didn't, definitely highly recommend have a project buffer. And whatever that buffer is, increase it again. So what are we saying? We're saying plan for high costs, plan for longer build time, longer settlement time. So your end buyer might need more time with their financials, and have a project buffer, and whatever that is, increase that again. So just be more cautious than ever. So there's still great project profit margins. It's got to plan appropriately.
Okay. So I guess pre-COVID, you would think development, but the developers required to put, in 30% would be the norm, roughly. Now we're talking about what, more than 40, 45%, just to cover that contingency, unknown factor.
That would make sense, absolutely. So most people do a project and they look at, positive and negatives. What if it's 5%, 10%, 15% positive or negative? Just factor a larger buffer. So worst case scenario, just expand that a bit more. So I agree with what you said there, Al. That makes sense. And if it obviously comes under time and under budget and sales price is better, then even better. That's always great, the upsides, but definitely plan for the worst.
Interesting. So in your experience, what are some of the common mistakes that developers make when seeking commercial development finance, and how can they avoid them?
there's plenty of mistakes. To be honest, I've been in the game for long enough.
Yeah.
But obviously, not every developer walks into a project expecting to not make any mistakes. You got to have worst case scenarios. But I think of late, the last 6 to 12 months, probably I would say emotional buying, right? So they're just hearing all these stories of people making projects and finishing and profiting, and it's great, looks great, sounds great. So the emotional, if you go out there, maybe go to an auction, raise up the hand, just love that project and just have to buy that site, for example. So maybe a bit too emotional, outbidding other buyers and just have to have it for whatever reason. And because of that, they might be paying a premium. So maybe 10, 15, 20% more than what the market rate might be for that property. So yeah, I would say that would probably be a number one criteria, because when you look at a feasibility, what can change the sales prices or the sales prices can't move too much. Build costs are pretty much there, if not escalating. So the only last thing that can move is the purchase price, the land or the property. So if you talk to any property valuer, that's what is changing these days. The GR's thereabouts, cost to build somewhat there. It's the land value that's dropping. So that's the key. So try not to be too emotional. Do your numbers, do your calculations, be willing to walk away. If it takes you 10, 20, 30 properties to have a look at before you buy, do that homework, spend that extra time, because that's when you make your profit, when you're buying it, not when you sell at the end. It's the beginning. So
right.
Yeah, it's an emotion. So use your head, not your heart.
Yeah. And what about like density of the dwellings on the site? So for example, they might go to auction, bearing in mind that they could get 4 or 5 dwelling on it. In reality, when they go to planning, then it can only stick to 2 or 3. Then that could be very, very costly mistake as well, yeah?
Absolutely. So again, do your homework. Get a good team around you. So getting the right town planner is very important. They understand that shire, the council, they've got connections, they've been there before, they know them. They know what's the current limit and then maybe what is possible. So you can have some preliminary discussions with council before you formally launch a DA. So those meetings can help you a lot, give you an idea if you're buying a site, is it possible to get that height that you're planning, or can you maybe go beyond? That's obviously where your upside is if you can. Most developers think, the past sites in that area, that street, only been getting 4 levels, so all I can do is 4 levels. Maybe talk to council, you might know some things that if you go a little bit down basement, maybe go a bit more parking, maybe you can go another level up, or it's near a train station, Todd. Traffic, transport orientated developments, you can get high height, for example. That can make a big difference to your profit margin. We had a client in the Gold Coast some years ago. Most people had certain height because they bought it well and they held it for some time. The council changed, and obviously through that time they could get a lot higher height. I think it was like 5, 6 stories extra.
Wow!
So because of that was massive profit that increased to them. So that was all upside to them, and they did very well from it. Of course, there's the risk of the other side too. Council could change some plans, so that could impact it heavily again. So you just got to be able to pivot accordingly. We've seen markets shift, obviously pre-COVID, during COVID, and even post-COVID. So you may have walked into a site thinking, I'm going to do high rise. Then that market may have changed during COVID. People wanted larger floor spaces, so you're targeting maybe 4 or 5 bedroom apartments then, maybe single story units. And now the market's changing again. There's a huge demand for rentable properties, so low affordable type of accommodation. So you might be rethinking that again. So it's going to be learn to read the market, try to plan ahead, and then pivot with that accordingly.
So I mean, in trying to understand all of that, I mean, there's a lot of challenges that developers need to really think about all of those. So what would you say we need to do to get all of those advice considered?
The key is obviously getting the right team. You've got to get a very good experienced team behind you. A lot of people try to cut costs, cut corners, and do most themselves. Unless you've been in the industry a long time, then that's great. However, I always strongly advise getting the right advice around you, no matter what, no matter how long you've been around. Most proven developers still get the right town planners and architects and designers, best builders around them, and constantly getting tenders to find better ones as well. So yeah, get a strong team behind you with the experience. They could, I guess, help minimize potential costs or losses. Maybe give you ideas, suggestions that you may have not thought about. So that could be a big game changer.
Yeah, no, that's so true. That's so true. Yeah. If you can go back to teach to your younger self or teach to your kids, what would you teach them?
Good question. I mean, I've always been in property, and I love property. I've seen it do very, very well for a lot of people, and so we've done very well ourselves. So yeah, I'll definitely say, you know, similar to what your board game you're talking about, it's crucial. Playing a game is fun. Play that in life, make it reality. So if I could go back to tell my kids or my former self, I would get into property. I'll get into property with more land. I would try to find more potential upside. So yeah, look for not just the area that's already developing now, but look for surrounding suburbs around it, you know, 5, 10, 20K radius of it. So in time, they will become future development. So yeah, find some project of land, potential upside. Yeah, that's definitely what I would say.
Yeah. Okay. So what are some of the key trends or changes in the commercial development finance industry that developers should be aware of?
I think trends are always changing. And again, we'll talk about the COVID factor. Prior to that, a lot of our big clients were building towers and towers of office space, office buildings. They were going larger floor spaces. Governments were looking for bigger towers. You know, there's so many sectors that were booming at the time and wanting more space for their staff. Since COVID, most people were working from home. Some still are. So some companies are trying to get people back to their companies and work physically. Others are still working with a hybrid, working some days, work from home some days, get into the office other days. Some are rotating office space. So they're moving out of the spaces and getting smaller spaces. So I guess what I'm saying is commercial-wise, not many people are building larger floor plans anymore. So they're going smaller, but being more versatile. So hot desks type things, rotating office space. You know, service offices are very, very popular the last couple of years. So working from home. So retail also is changing somewhat with the demand for online and internet purchases. You don't see many shopping centers of the likes anymore. They're evolving. Ones that are struggling, they're getting a lot more vacancies. So they're trying to evolve themselves to find, I guess, ways to rebuild themselves, have themselves more facilities, more amenities, and keep people going back to shopping centers. Industrial, for example, that area has been booming. So we've seen what China's been doing the last number of years. Australia is growing, and a number of different industries are thriving. So we've been funding a lot of projects at industrial warehouses, and they're doing very well. So again, do your homework, find the right product, find the right product mix, work with your market, and then plan ahead with that market accordingly to provide the right product.
Okay, very interesting. If there's one thing you would want to do in your lifetime, what is it and why?
Probably travel more. I think everyone with COVID, we were stuck at home, especially those in Victoria. I felt for you guys. It was frustrating, you know, limitations, restrictions, shutdowns. That was just horrible. Us as human beings, we're used to traveling and getting out and about, and having restrictions was, I guess, quite a big hindrance. So yeah, I would definitely like to travel more now that we can. Country's more open now. We can get out and about. And the kids are a bit older now, so I would love to get back out.
Yeah, that's awesome. Yeah. Favorite things you do on your day off or in your spare time?
Wouldn't say I have much spare time these days. I maximize every minute. But running is definitely something that I love personally. I've probably picked up running for the last 8 or 9 years now and just love it. So I'm a run director myself with Park Run. So we hold 5K events every Saturday.
Wow.
We do marathons, half marathons. So I just came back from 20K run training on Sunday. So I just love it.
Oh my gosh, 20K. Wow. Okay.
Yeah. It's not something that's everyone's favorite pastime, but it's just crazy. The busier we are, I find the more active I am, either at the gym or running, I feel more energized. So I can do more in my time. So it sounds crazy, like an oxymoron, but the more I run, the more energy I get, and the more business I get out as well. So Yeah,
Wow,
it's
wow.
fine. I may not be forever now, but
Yeah, exactly. I guess running is not for me, definitely, yeah, especially 20K, probably not. I can't even
maybe
struggle
try
to
it.
do 2K.
Easy
Yeah,
5K.
that's it. Yeah.
2K is fine as well.
If there's someone dead or alive you want to take to lunch, who would it be and why?
Good question. Historically, one of my biggest mentors in life at the time when talk about property was Donald Trump. It was someone I admired, I looked up to, read heaps of books, was seen a seminar, but just the energy and aura he had.
Yeah.
I would have said Donald Trump, but however, since the elections and everything that's happened in America of late, it's probably not someone I want to catch up anymore. It's definitely someone of the future. So Elon Musk is definitely someone on my agenda. Just admire where his mindset is, business he's had. Yes, I'm sure he's got plenty of challenges that people may not look at success stories and how much money he's made, but I'm sure there's plenty of challenges. So I really like to delve deep in his mind and the experience, look at what his challenges, what the problems, how they get through those problems. His mindset, look at the future. SpaceX is exciting. Where else it's going? Next frontiers. To me, that's exciting. That's someone who I look up to at the moment, and loving where he's going.
Yeah. No, very inspiring man. Yeah, indeed. And last but not least, are there any questions that I could have or should have asked, but did not ask you on the final takeaway of today's chat?
Yeah. So I think get educated. I think that's number one. When I went through school, everyone said, "Yep, learn." Yep, absolutely. Even life lessons in real world. So get out there, learn. If you can piggyback off someone, that'd be great. For example, get out there on the construction sites, talk to the builders, talk to developers, ask them out for lunch, buy them a coffee. Just those inspirations you can pick up, good or bad, is vital. I think surround yourselves with the right people around you, even positive or negative advice, but get a good team around you that's been there, done that. So they could help you further. I talked about the strong network, good architects, good town planners, good, builders, good financiers, very important, of course. But yeah, surround yourself with the right advice, and not always the cheapest. Remember that there's people with advice can help you. Do your homework. I can't stress that enough. Do your FISO again. Check your numbers, check it again. We've even found clients already got the pre-sales, then they go back to the builder 6 months later, but then the costs have changed. So you should really work with them monthly while you're getting your pre-sales, if that's your plan. Work for your builder, work where they're at now, and in fact, continue. So very important of the groups around you. Do your homework with build costs, especially nowadays, even if you've got pre-sales. Have a backup plan. What's worst case scenario? What if that eventuates? What do you do? We've seen clients walk into a project, say, "Yep, I'm going to do a land sub." Then later on, they get different ideas. No, I'm going to build. Okay. And later on, so no, apartments. Yeah, highest best use. My town planner told me. But then the market shifted. Okay, shift that. Let's go townhouses. Yep, it's definitely the market. And then the market took time, and then maybe you're not ready yet. So costs maybe rise. So maybe look at maybe just subdivide and sell the land. So yeah, there's many ways you can pivot. Think outside the box. Find solutions. That's definitely what I would definitely advise. And then if you're thinking, planning, ultimately take action. I've met a guy from a seminar a few years ago. He was an accountant by trade, and he was a thinking, planner, and very cautious. Great to be cautious, but he was so cautious he missed 3 cycles. But he missed 3 markets. I met him 8 years ago, and he missed the market when it boomed, and then he kept changing his mind, couldn't decide, and then COVID hit. He was too afraid, didn't do anything. The market boomed again, missed that cycle, and then he shifted, evolved, and then missed that market again. So there are always opportunities, even in challenging climates like we're seeing right now post COVID. Construction rises, rate rises. Inflation rising, but still there are opportunities. There's a huge demand, as mentioned before. There's not enough properties for renters. So, if you build it, they will come. You got to do your research, but back yourself up. If you've done the planning, you've got the numbers, you've got the money behind, you've got the people around you, if you've done all that and you're cautious, you've got contingencies and buffers and savings. What else are you waiting for? If you've done it all, it makes sense. Then take the action, do it. So yeah, that's probably most of the things I would share. And then at the end, enjoy the ride. Have time with the family, have time with kids, travel, get out there, do a park run. Enjoy.
20K race. That's it.
Yeah.
Excellent. All right. What is the best way for people to get in contact with you for your professional services?
Jump on our website, holdencapital.com.au. Maybe send me an email, eric@holdencapital.com.au. I'm always accessible. I'm always online. I'm always out there, either Facebook or Instagram. I'm always looking at helping people, guiding people. As mentioned, I've met people at seminars. I've met people after, plenty of meetings, love my coffee, catch up for coffee, have a Zoom if it's in the state. But every now and then I do fly in the state and catch up with clients and see their projects. But yeah. Nowadays, everything is very accessible nowadays.
Excellent, beautiful. Okay, so that's the another formal presentation. I don't know what's happening with my camera on this side. It's just switched to the default one.
Technology.
Again,
we have one of
just technology again. Yeah. Luckily, it wasn't just right, in front of a formal podcast. Again, I really appreciate your help today, Eric. I really appreciate you coming on this podcast and share some insight with us. So otherwise, all good with you from your side?
No worries. Appreciate again for the opportunity, Al. It's always good to actually meet more people and share I guess any piece of advice we have. But definitely it's been a great opportunity as well. I appreciate it.
Cheers. Thank you. All right, you take care.
All the best. Cheers. Bye.